it's like there's this whole new category of innovation that's happening where, it's a global technology. You have some of the, smartest, most innovative, fintechs, many of whom, the founders have built, the last generation of fintech that are now, building these global products on top of stablecoins. So it's incredibly exciting to us. It's like a whole new era for fintech.
Welcome to Tokenized, the show focused on stablecoins and the institutional adoption of real-world assets. I'm Simon Taylor. I'm back in the hosting chair today, author at Fintech Brain Food and head of strategy at Sardine. Cuy, thank you so much for stepping into the host chair last week. How you doing, my friend?
It was not easy. I've got a lot of respect for the way that you steer the ship, and so it's good to have you back, Simon.
No, it's always fun to hear from you guys, and we have, as always, just some incredible guests. Joining Cuy and myself today is Henri Stern, who's the CEO of Privy. How you doing, Henri?
I'm great. Thank you for having me on.
And then we have Jelena Djuric. I hope I've said your name vaguely correct. CEO of Noble.
Hi, thanks for having me. It's almost correct. It's Jelena Djuric, but thanks for the attempt. It's not an easy one.
I am Ron Burgundy. If I see it, I'll try it. But we'll get better every time. All right. Before we get into the news, we just have to remind everybody that this podcast is sponsored by our friends at BVNK. And if you've been listening to this podcast, you've probably heard us say every business needs a stablecoin strategy. And if you're looking for the best place to start, that's BVNK. BVNK is the leading provider of stablecoin payments infrastructure, helping businesses move money faster, settle globally, and even launch their own stablecoin products, all with licensing and compliance so you can build with confidence. We're proud to partner with BVNK on Tokenized. To learn more, visit bvnk.com. And of course, before we get into the content, I just have to remind everybody, of course, views and opinions of contributors are their own and don't necessarily reflect those of their companies. And please don't take what we say as tax, financial, legal, investment, or even sports advice. It's just do your own research out there, people. All right, there's probably only one place we can start. And this is about Visa and Bridge and, of course, Stripe partnering to launch stablecoin-linked cards. And I could tell you about this story, but we have somebody who might know a little bit more about it. Cuy, why don't you take this away, sir?
Yeah, sure. So really exciting week for us. If we take a step all the way back, we believe that Visa should be the acceptance network for stablecoins. We've spent 60 years, getting 150 million merchants, to have endpoints, that accept Visa. And as we see new technologies like stablecoins emerging, they need acceptance. And we think it's going to be really challenging to go out and build, get every new merchant to accept this new payment method. And so we think that, the card infrastructure that we've built, solves this problem very well in enabling consumers to spend from a balance of a stablecoin at any merchant that accepts Visa. But to do that, we need world-class next-generation enablers that are specialized to help wallets be able to, issue cards, connected to stablecoin balances. And so we really looked around and we said, okay, who can help us do that? And I think when we look at Bridge, I think Bridge has really become, a leading stablecoin orchestration platform, has played a major role in accelerating the adoption of stablecoins across payment use cases. And they've got so many developers that are building on top of them, to be able to embed card issuance inside their platform, enable any developer that's using Bridge, to then be able to consume another API, to issue a card connected to their balance, and then to do that in many countries at the same time. We think that is a very big deal. And so we're really excited, to try and really create this category of stablecoin linked cards that we want to scale, across the world. And so we announced our partnership with Bridge. We also announced that we partnered with banks, a leading enabler for self-custodial cards. We are expanding our partnership with Rain, another enabler for stablecoin linked cards. And so we need these next gen enablers And we think that they're going to play a major role in bringing millions of new cards, to market connected to stablecoin wallets.
I find this fascinating as a fintech nerd who has witnessed and indeed tried to get card programs live in multiple countries before. And the thing that stood out to me about this is potentially with one API, you can now launch a card program, I think, in Argentina, Colombia, Ecuador, Mexico, Peru, and Chile. That's pretty impressive start, but that's, I think, just the beginning, right? Like those are the countries that are live today. There will eventually be many, many more. So stablecoins is almost this new infrastructure for payments. It is fascinating. But Jelena, I know you live and breathe in stablecoin land. What are your immediate reflections about this news?
Yeah, I mean, as a protocol that has been trying to kind of work with various card issuers, it's obviously exciting to have a bit more of a standardized sort of system and integration process to kind of work with, again, protocols such as Noble. So just very quickly, obviously, Noble is in the business of on-chain stablecoin issuance. I mean, I know the Bridge team obviously very well. They've done incredible work around obviously the orchestration of stablecoin, between various protocols, whether you're looking at USDC on Ethereum and you need to kind of swap on chain to a different stablecoin on Solana. They kind of handle that on the back end, and they obviously look at the on and off ramps. We obviously also focus a lot on the issuance piece, again, on chain, but looking at the off-chain world, it's been relatively challenging, actually, kind of getting the attention of these companies, and whether that's a Visa or a MasterCard. And so it's just exciting to see that Visa plus Bridge is going to allow, again, protocols such as Noble to be able to kind of expand our reach, again, in the off-chain world, right? Kind of on-ramping people into crypto. So yeah, immediately very exciting. Can't wait to see how this works. And it's all very positive.
Cuy, you had this term, dollar cards, which to a lot of folks in this part of the world, it's not a stablecoin wallet. It's not some other crypto thing. This is a way for me to buy, spend, and hold dollars. And potentially now, for me as a card issuer, or for me as somebody that's a fintech program, it's a way for me to access customers in all of these different markets through a single API. So I find that market expansion side of it really, really fascinating. Henri, what stands out to you about this announcement in particular, and kind of the more broader themes and topics it speaks to?
Yeah, I think from our standpoint, so we're building a lot of, as it were, call it stablecoin accounts, really from a wallet infrastructure perspective. So the core value we serve as Privy is hold value for people who don't have access to dollars otherwise, is where we see a lot of interest. And so this question of global expansion is really important. I think the thing that excites me a lot is we're seeing some limitations today in terms of liquidity on off-ramps globally, meaning the theory of the stablecoin is amazing. The practice of the stablecoin, if you're moving real volume, gets tough on long-tail geographies. And seeing kind of this idea of a multimodal like transport network. I think a lot of if you're trying to move goods across the world, you can use trains and trucks and ships and planes, and you pick the best transport method for the value of the good and the needs that you have around the freight. And this to me makes me think of that, which is we just got a new rail, and basically you can piggyback off of Visa network, which is already extraordinarily well implanted globally. And so I think in terms of developers trying to build on these systems, it means one more option for how to route, magic internet money globally. So it feels really, really exciting. And I think seeing more and more of those modalities come out is really exciting. And then I think over the next couple of years, understanding how are, financial institutions understanding the choices they have with regards to routing assets. Is it via banking partners on the ground? Is it via existing card networks? And how does that work? Is I think going to be a really fascinating question that makes stablecoins that much more valuable. So feels really exciting.
Yeah, the other thing that I think it's important to call out here is we've had crypto linked cards in market for many years now, and we've had a number of very large successful crypto card programs. I think most crypto card programs it has been a debit or prepaid card connected to a crypto exchange, and consumers would be trading. They could then sell their assets and be able to spend it. I think what we're seeing now are just many new different types and use cases of cards connected to stablecoin wallets, where there might be a stablecoin based neobank. They have nothing to do with crypto. You can't buy or sell Bitcoin, but you're holding dollars in a market outside the United States. There are stablecoin linked corporate card programs where there are small businesses that are holding stablecoin balances. There are self-custodial wallets that are doubling down on stablecoins to enable payments. There are payout platforms that once they pay out in a stablecoin, like Henry said, there isn't a great off-ramp. Well, what if once you receive that payout, you can then be able to instantly spin up a card to be able to spend? There are collateralized credit programs. So it's like there's this whole new category of innovation that's happening where it's a global technology. You have some of the smartest, most innovative fintechs, many of whom the founders have built the last generation of fintech that are now building these global products on top of stablecoins. So it's incredibly exciting to us. It's like a whole new era for fintech, and we're going all in and saying, how do we become a partner and help from the very beginning enable the connection of those new companies that are being built into the existing merchant acceptance that we have.
I think that new era for fintech is exactly how I see it as well. It's very weird for me, Cuy, because my crypto world and my fintech world were very, very separate for a very long time. And this is like right in the middle of both of them crashing together because it's a new infrastructure for building financial services products. It's a new way to build financial services products that are more global by default. And launching a card program, I'm gonna bring it back up, in 6 markets with one API is like, do you know what you would have to do that historically? You would have to go find different local bank partners. You would have to deal with different local regulations, different local licensing, different local processors. And whilst visas would be present in all of those markets, all of the rest of the stuff wouldn't necessarily. So the technical details you need to get right to be able to plumb all that together that Bridge and Visa have been able to bring to bear, I think is really, really something special and starts to enable the beginning of maybe a new generation of truly global fintech businesses in a way that we had regionalized fintech businesses or massive domestic players. Sort of Nubank is very big. It has expanded out of Brazil into Mexico, but it goes market by market. Revolut is very big, but it's expanded outside of Europe, but it's going market by market, and it's still very much a European player in its dominance. This opens the aperture for so many businesses, and I find that exciting. Jelena, what are you seeing in that sort of globalization trend? Is that coming from any particular direction?
Yeah, I mean, one thing I want to just touch on, just looking at kind of fintech and crypto, whenever I try to visualize like the overlap, sometimes it looks like a Venn diagram, but sometimes it looks like a kind of an if and. Like for me, all fintechs will inevitably have to use crypto, but not all crypto will be a fintech or even like leverage fintech kind of, what you think of like fintech as a category. So I think like for me, inevitably, right, like as you said, like the more regionalized kind of fintech businesses that, had to kind of go into local markets, get the approvals, work with regulators, work with banks, being able to use crypto and specifically stable coins just kind of leapfrogs you into more of like a global kind of territory where now you don't have to kind of take into consideration all these like local challenges. But yeah, I think like the next generation kind of fintech companies will just be crypto native from day one. I think for us, we're always thinking about where sources of demand are. I mean, it makes sense, obviously, that the initial kind of geography that the Visa and kind of Bridge kind of a product is looking at is LATAM. We all understand LATAM to obviously be a really important market for like US dollar kind of adoption. We at Noble are actually looking a lot more at Asia. I think we're going to talk about Korea in a little bit, but a lot of our demand for actually our own stablecoin called Noble Dollar, USDN. It's a yield-bearing stablecoin. Think of it, as it's a dollar peg stablecoin collateralized by treasury bills. The yield kind of gets passed on in a specific way. In any case, a lot of that demand is actually East Asia. It's a lot of Japan, it's a lot of Korea, also Southeast Asia, a lot of Vietnam, Hong Kong. So yeah, I think there are pockets of demand in the world that like, depending on what's happening kind of politically, economically, they will like rise or maybe fall a little bit depending on whether it's inflation, whether it's, even, geopolitical uncertainty. But right now we're seeing a lot of Korea again and a lot of Japan, and then we can talk about that a little bit if you're interested. But um, it oscillates. Like the messages it oscillates. Again, I think LATAM makes a lot of sense right now for kind of Visa and Bridge. But I think that that'll change over time, right? Like it's not inevitable that these countries will experience the same levels of inflation or the same levels of currency devaluation that we might see right now.
And I wonder how much that's the long-term value proposition is that like the US dollar is stable versus the US dollar is global. And that sort of starts to eventually shift from like who it solves problems for, because once it's in, it's entrenched. Henry, the Asia point is a really good one. Are there anything else that you see in this story and things like it that we should be paying attention to about the general direction of travel around stablecoins?
Yeah, I have two thoughts that are probably a little bit more micro than macro, I guess. But as a side note, the question of is it the US dollar stable or global? I've been thinking a lot about what the Esperanto coin would look like if you tried to build a global coin that was a good mix of things. I think Cello tried to do this a long time ago, and the issue with it, as I understand it, is that it's really hard to provide liquidity if you've got a complex basket of goods. And so that is why at least adoption of the Esperanto coin, as I'll call it, is hard. But I think it's like very interesting to think through. To give an answer, I think what we've seen, so we've actually seen a lot of stuff in South America and Sub-Saharan Africa. And I think where at least our customers have found success is by kind of dangling lines in the water across a number of geographies and then letting recipients choose rather than senders. Because ultimately the sender is like fairly unopinionated. For somebody at least doing a stablecoin sandwich, it's $1 out either way. And so I guess the stablecoin tartine, where the recipient can choose to get the open face, which is to say to receive stables rather than getting fiat, there's a lot of demand on the recipient side for I would much rather receive USDC, call it, than Naira, because Naira is valued against $1 very heavily. And so where at least we've found some of our customers having really good success is they'll try a number of geographies where they've got active corridors where they can kind of figure out if we offer a stablecoin alternative to our fiat rails, can we actually make meaningful progress in the adoption of these rails that, improve our margins, drive more volume, and then they actually let the recipient opt into receiving stablecoins rather than receiving, native fiat for them. And that's where we're seeing sort of a lot of the geographic traffic come from. And at least for us, in the data that I see, that's yielded activity in sort of South America and Sub-Saharan Africa. But obviously, I would argue that data has been heavily filtered by our own GTM and so on and so forth. So I don't know how much to read into it globally.
Yeah, it does appear to be global south and/or corridors that were harder to address historically. There was a good report recently by Citibank, I don't know if you all saw it, that estimated by 2030, stablecoins would balloon from somewhere around 260 billion in issuance today to around 1.6 trillion as a base case and 3.2 trillion in a higher and more aggressive case. And 2030 is 5 years away. Like that's 5 years time for a 10xing of that. Then you have potentially, I think it was Standard Chartered put it somewhere like 2.1 trillion by 2028. Standard Chartered is a bank that operates on, very, very closely with Zodia Markets and Zodia Custody. It is in the flow of funds, of which the other side is a stable coin, so that they're not uneducated on this point. And I think that speaks to the market opportunity here, Cuy. Where do you see this going forward?
Yeah, I think in general, it's really interesting to see even relatively conservative financial institutions and kind of their research teams putting out projections that to people outside the space seem to be trillions of dollars of stablecoins. Like wouldn't that be crazy? But we haven't really seen a historical parallel of a technology that has been like very clearly adopted in a bottoms up way that has real product market fit with a new generation of developers who are just building all sorts of things on top of it on day one that is likely going to have increased and hopefully at some point a kind of real regulatory clarity that it is going to be able to be part of the financial system. And so, like, if you get a bill passed, what does that mean for the growth of supply? What does that mean for how the demand? So it's like everything that we're at today is still in this very weird early world where it's not really clear who can use these. I think there's so many barriers to large institutions. If it becomes a regulated payment method, I think that the adoption can grow very, very quickly, which is one of the reasons we've been saying the whole time of you can't really wait until that happens, to have a strategy and to start building in the space. And I think that the fintechs have already come here. It's like crypto companies have been here. Crypto companies invented this. Fintech companies are here now. And I think banks are sitting there watching and saying, do we want to wait until this becomes a real, legal kind of way to move money, or are we going to get started now and kind of building a strategy and plan so we can meet the market where it is?
Well, or do we just let it all become more narrow banking and become deposit flight and become something where we could be outcompeted? And it seems that the Bank of America CEO has been quite vocal in the opposite direction and indeed is looking for that clarity, but has consistently driven home that theme in numerous interviews now that it would be something they'd look to engage in. Henry, you about to jump in?
Yeah, I had a question. I don't know if it's kosher for me to ask, but a question for Cuy is like, I'm wondering what the sort of dominoes that have to fall are, because this is a sort of intrinsically global technology. And yet, it seems like there's clearly one or two levees that have to break in order for adoption to continue to grow. And obviously, like legislation in the US is a big one. But, we look at, if you compare, call it Egypt to the UAE, very, very different attitudes towards stablecoins and generally capital controls. And I guess I'm just wondering, how do you actually see the spread of the technology globally once these sort of early legislative efforts pay out? Like, what are the key milestones beyond U.S. legislation that, in the eyes of a Visa, for example, unblock, okay, we can actually start doing this on a global scale, even though there will be sort of regulatory differences between geographies?
Yeah, it's a great question. And I think as we roll out products, we look at every individual market that we're rolling a product in, and we have to understand the unique regulatory environment there. And are we able to offer a certain product? I think what's going to be really interesting to see is in a lot of markets, there's just not really clear rules. I think most markets it's not illegal to offer a stablecoin or to enable a stablecoin, but there's not a specific bill. There's not a specific law in the books of what the requirements are if you offer a stablecoin product. I think once you get regulatory clarity in the U.S., it seems likely that many other markets will want to have some clarity of their own, and whether that is looks very similar to what it is in the U.S. or whether that is a different approach. Maybe you could even have a more defensive approach. We don't know yet, but I think right now it's how do you operate within a challenging environment, making sure that in the market that you're in, there's not anything that explicitly prevents you from being able to bring a service to market. I hope that we get to the point where it's very clear what the rules are for bringing a service to market, and it's tailored towards this new technology, which I do think is fundamentally different from some of the existing ways that value has moved in the past. But it'll be fascinating to see it play out.
I was just going to briefly add in, the UK passed, sort of issued the HM Treasury and the Chancellor announced that their sort of upcoming crypto legislation, they've sort of launched a little statement on it. And it looks like they're not necessarily going to follow the MiCA path of requiring stablecoins to have their own liquidity buffer, their own white paper, if they are issued elsewhere in the United States, which when you consider so many stablecoins are dollar denominated, essentially makes it far easier for the UK population and for US dollar-based stablecoins to operate within the UK regulatory perimeter. And so that is kind of interesting, different type of certainty and more US leaning. Sorry, Jelena.
I was just going to say, I think the US being more aggressive, especially under the Trump administration, on providing regulatory clarity on stablecoins, whether that's something like the Genius Act or the Stables Act or something in between, is just going to force a reaction across actually countries with currencies that are more at risk of kind of where U.S. dominance is kind of supreme. So countries like Korea, even countries potentially with currencies that again are inflated, like Nigeria, even like the naira. I understand there's like some stablecoin kind of push for legislation. I think there's like a risk with kind of lesser dominant currencies that with more U.S. dominance, they're going to be maybe more kind of at risk. And then on the opposite side is like the euro and the yen, where you already have the euro and the yen as huge parts of the traditional currency markets, where they're saying, okay, let's be as like strategic, with our kind of regulatory, approach, so that again we don't have this risk of kind of the U.S. kind of again like dominating these markets from a stablecoin perspective, and making sure, yeah, there's kind of alignment, kind of there. So, anyways, this reactionary element is really interesting to kind of observe in different jurisdictions and in different ways. Yeah.
Everywhere's different. It's so true. It's so true. All right. Well, speaking of everywhere being different, there's also Worldcoin, which is attempting to build a single identity network for the world. But it's, of course, founded by and famously linked with the OpenAI and ChatGPT creator Sam Altman. And Worldcoin is best known, of course, for its orb, the iris scanning device, and delivers a proof of human in lieu of some sort of KYC on knowing their customer, designed for a future in which AI is much more prevalent, but also for parts of the world where traditional KYC or identity might not exist. Now, that sounds like something that is entirely long-tail market-based, but it appears they have now launched in the United States and are now widely becoming available. So, Henry, this is your neck of the woods. You know a little bit about identity and a little bit about wallets. What are your thoughts on this, and what would you add about Worldcoin specifically?
Yeah, interestingly, actually, right before I started Privy, I did a little bit of crypto economic research for the Worldcoin team, and so spent some time on the token model, which I'm sure has changed about 15 times since then. But I think it's a super thoughtful team, and the assumption, at least from very early on, and again, I've today speak entirely for myself and have mostly no idea about recent developments. But I will say the assumption early on was like, if you put a piece of hardware out there, it's likely to get hacked within a matter of months after release. And so there was very interesting assumptions around defensibility of like Sybil resistance. And that was at least the angle through which I think with a crypto native lens, I saw it, which was the proof of identity was a way of doing basically fair launches and something close to UBI, with a sort of like really strong Sybil resistance mechanism. So I think there's two questions. And sorry, I'm answering a little bit vaguely, but there's two things that I find very interesting. The first is, as a pure distribution mechanism, can they basically bootstrap a dominant network on the tails of just having widespread sort of network ground game? And this is kind of what you see with like USDT on Tron is such a popular stablecoin mix because they just did a better job than everyone else distributing it via Binance in a period where no one else was doing it. So that's the first question. And then the second is like the Worldcoin app and a lot of the wallet systems that they've built are really, really good and interesting. And they're trying to bootstrap a developer ecosystem on top of it. And so at least that's the second thing I'm watching for, which is how robust are the apps being built on top of like Worldcoin and the network that they've built, and can they actually get organic usage in that way? And I know at least a number of really talented developers who are like, this is an open market in which we can make a real difference, which might be harder in EVM or Solana. And so let's go there. So I think there's like quite a number of interesting things. And I think bringing it to the US probably pushes to like the second narrative in a deeper way than the first, in that, there's a potentially more built out traditional banking rail in the US than there might be in other countries where Worldcoin's really heavily distributed. I don't know if that answers your question. Some rambling thoughts for you.
There's so many layers, to Worldcoin that I find it. I think it's just one of the most fascinating stories and projects in the space for anyone who's not familiar with it. I think the place that I start is I think the problem that they're trying to solve is a really interesting problem that is not talked about enough. And frankly, I don't see that many companies or teams that are trying to solve. And I think the problem as I think about it is, as agents become more and more powerful, you know, how is the interaction with digital services that a consumer has going to evolve? And, if you think about, traditional services, whether it's a dating app, whether it's a game, like, we're accustomed to you're interacting with other humans. Like that's what it is. And there are mechanisms and captchas and things to like, try and make sure that it's human. If agents get powerful enough to make it very hard for a captcha or, select the stop signs or like the trains in the picture, like how will a developer of these services be able to enable a authentic, human interaction where you're actually talking to another human? So I thought it was really interesting the announcement, last night, having, I believe Match Group was involved in it. And so one of the largest, dating app, conglomerates, and they're like, yeah, this solves a real problem that apparently people create bots on dating sites, and it's hard to know, are you talking to a real human or not? So I think that if that becomes a problem, which it's not clear today to the extent of how big of a problem or is it a problem, if it becomes a big problem, then having some way and other mechanisms, to ensure or try and, get some guarantees that it's a human, does become this interesting intersection between Web 2 and, this new kind of, crypto native technology that they've been building. I think the other piece of the story that we're really excited about is that we're collaborating with Worldcoin around the World Card, which will be a World Visa card connected to the wallet. This is a bit of a different use case. It's really starting to focus on spending your WLD rewards, and so they've got, as Henry mentioned, this like ground game of there'll be orbs in all these different locations that consumers will go to. They will enroll and onboard to get a World ID, and so it's like you will have a face-to-face touch point. Once you get your World ID, you earn some, WLD. Well, you could then spin up a virtual card, right there and be able to then go and tap to pay and use your WLD rewards to then spend, at any merchant. And so I think we haven't really seen that many fintechs that have had this direct to consumer, a physical person talking to them, showing them how to use the app. Like that could be a really effective, acquisition channel. So I think it'll be really interesting to see. But Jelena, I'm curious how you think about World and how you look at the project.
Yeah, I mean, it's a fascinating discussion. I can't say I'm nearly as deep into WorldCoin as maybe Henry with his kind of advisory or guy with kind of the work Visa's doing. I mean, I will say the digital identity piece, the thing that like really makes me nervous in a world where, yes, you have like for all intents and purposes, like sentient AI is actually the governance of these protocols, right? Like, um, will like the governance of even something like the Ethereum network or whether that's Solana or like high valued protocols, like will AI like have an influence there where potentially kind of like like humans will have less I guess like governance power or ability to kind of influence the direction of protocols, whether that's like spending funds, whether that's like software upgrades, whether that's even like token economic parameters. So I guess like I guess I see obviously the importance of like verifying humanness or proof of human in these like systems. I guess like for me, the WorldCoin approach is, yes, it is more bottom up, it is more grassroots. I mean, from what I understand, they made a huge push again in like South America, and like there was a lot of incentivization of like getting people to like scan their eyes, and yes, there was like the token kind of incentive mechanisms. I mean, yeah, like you need to kind of bootstrap these systems somehow, but I wonder if there's like a limit, like at a point where like can they actually get every single person in the world to like scan their eyeballs? Like I don't know. So maybe there's kind of alternatives for proof of human that we can like engage in, right? Like I actually would love to prove that I'm like authenticate. Like yes, I am, a single individual, and there's no way to kind of you know manipulate that, I guess, like whether that's on chain, whether that's just on the internet in general. But I don't know if I would want that to be via Worldcoin right now.
Well,
So
not just AI agent commerce. There's also deepfakes. There's also like, do you believe what your eyes can see, especially when it's behind a screen? There's a massive rise in scams. Phishing emails have become almost impossible to catch because of Gen AI. In the fraud world, very near and dear to my heart with the day job at Sardine, like the spike is unbelievable and it's across the board. Like the numbers are up and to the right. The best business to be in right now, I'm not saying you should do it, is probably fraud. Because you can go buy custom fraud as a service LLMs that will just sit there scamming people, generating money for you. It's ridiculous. So how do I as a merchant get confidence that that is my customer? How do I as a merchant get confidence that when a human has pressed a button, it really was a human and not an AI agent pretending to be them? Like the problem Worldcoin is trying to solve is a massive one in just that level. And I buy your point, Jelena, that like it's a little bit sci-fi and a little bit weird, that there's some eyeball scanning. There's a what if it gets compromised set of questions that I think are very, very valid. There's been some controversies with data privacy with certain governments that have definitely happened. Maybe there's room for competitors and other approaches. But I think to Cuy's point, we do definitely need something that closes this gap as AI becomes exponential.
Yeah, Henry, I think question for you when you spent time with the team is like, how do you see the target market from like a demographic standpoint? Because I think the other interesting lens of this is, if I went to my parents, I was like, hey, I want you to go, scan your eyes at this orb. Like it's just like there's like a generational thing that you're like, what? But if you go to a 16-year-old or like an 18-year-old and you say, hey, there's this like really cool new online game, but because everyone keeps botting it, the only way to play is if you have a world ID. Like, would there be that same reaction of like, oh, no, I don't want to do that? And it feels like there's almost like it's a different value prop if you're just trying to have someone verify their humanness for the sake of, versus if there are applications that like it solves a problem that they're only willing to serve you the application if they know that you're a human. So how do you see that playing out?
Yeah, it's a really good question. And broadly, I would maybe try and divorce the orb and the iris scan from the value of the network, and that I see the orb as being an extraordinarily, like other people have done proofs of humanity. There's a ton of proof of humanity network in crypto that have been built. There's a whole host of issues and complex problems to be solved around consensus for how do I prove that Cuy is Cuy? And, do I have the three of us attest to the fact that we've met him, that he is who he says, and so we can issue him credentials that have, whatever trust is gotten from Simon, Jelena, and myself saying so. And so instead of seeing it as binary, human, not human, I think it's a question of like, basically identity scoring and risk vectors. And I wouldn't be surprised if Worldcoin works broadly, that they would introduce other mechanisms, right? They would say, well, listen, if you don't want to scan your iris, just go through this KYC process. You'll get a, call it 60% confidence score versus the iris's 80% confidence score. If you do both, you get a 100% confidence score. And that maybe changes the type of risk that a merchant is willing to take with you in terms of what credit they extend to you or something like that. So I suspect this is the start of an ecosystem. And what's so cool about the orb is it solves just a very complicated consensus problem by saying, here's a black box. It's kind of akin to like secure enclaves and TEs in terms of like computation. Here's like hardware solution to this very complex software problem that allows us to bootstrap a network. I think from there, Cuy, your point's like on the money in my opinion, which is to say like there's stated preference and revealed preference. I'm generally have a complex relationship with biometrics as an authentication method, but you show me a KYC form I have to fill out and all bets are off. Like I'm very excited to not fill that form out for the 15th time this month. And so I think just in terms of conversion, there might be better reasons to do this rather than something else. And ultimately what you're getting with Worldcoin is not so much an iris scan as much as it is a verifiable credential that you can now take with you that says something about who you are. And so I think it's a great question. And I generally think, I forget there's this debate around Bitcoin is the new digital gold and how do you quantify it or how quickly does it take off? And it takes off basically one death at a time as the generation who used to buy into gold basically dies off and are replaced by folks for whom the digital asset makes more sense. I suspect the same may be true here in terms of basically identity verification.
Interesting. All right, I got to take a pause here and thank our sponsors, and we'll be right back. This episode, if it isn't already obvious, is sponsored by our friends at Visa, the leader in digital payments. Visa's Tokenized Asset Platform, or VTAP, uses smart contracts and cryptography to help banks bring fiat currencies on-chain, whether it's launching a stablecoin or deposit tokens or something else. VTAP allows financial institutions to issue fiat-backed tokens, improving financial efficiency and enabling programmable finance. Check out the links in this episode's description to express your interest in VTAP. This episode is brought to you by Canton Network. Ever wonder where real tokenized asset volume is going? Canton Network. The groundbreaking layer 1 public chain where traditional finance and crypto are starting to converge. Why? Because Canton is the only public network with privacy. No workarounds, no compromises. This is 24/7 markets, on-demand financing with real yield, where value moves as freely as information on the internet. This isn't just another blockchain. No, this is where the serious money is flowing to solve real market demand and risk. Visit canton.network to learn more. All right, thank you to our sponsors. The other news this week coming out of Bloomberg is apparently Ripple is said to have made a somewhere in the region of $4 to $5 billion offer to buy Circle. According to Bloomberg, this offer was rejected for being too low and interest remains. Jelena, your thoughts on this one? I know Ripple's a major player in Asia Pacific. Is there some logic there that would make sense?
Yeah, I mean, we've been working very closely with Circle over the years, so understand that side of the equation probably better than the Ripple side of the equation. Obviously, we had the S1 filed by Circle indicating their intention to go public. There was a lot of juicy details in that. I'm sure at one point this podcast covered that S1 and some of those discoveries, let's say, around kind of Circle's business model. Ripple obviously recently announced they would launch Ripple USD or USD, their kind of own stablecoin. I mean, you consider kind of the traction that USDC has, like $50-60 billion of issued across, a wide variety of networks, across, a very wide variety of geographies. I mean, it would be pretty simple, I think, for, it makes sense for why Ripple wants to buy Circle. I don't think it makes sense for Circle to want to sell to Ripple necessarily. It's not only necessarily the price that's in consideration. I think it's also like, how will this kind of, product be kind of, used? Would it be faithfully kind of, managed? I know Circle has a lot of kind of plans around like the Circle payment network and, just around even like, routing protocols, their kind of native bridge. It's unclear kind of what Ripple's approach is with their stablecoin. It just seems like maybe opportunistic isn't the right word, but it seems like a kind of easy opportunity if you have a lot of cash to want to buy Circle. But if you're Circle, do you really want to sell necessarily to that kind of buyer? It's not just necessarily about the money. Yeah.
Yeah, and as though they're a broader M&A target, and also is Circle's value proposition almost diminished by going towards Ripple versus staying somewhat independent or being seen as independent. Henry, your thoughts?
I'm like woefully out of my depth here, so I will keep it vague in general.
I love that. That's how I live my life.
It's a good tool. No, I mean, I think that maybe to Jelena's point, the thing I find interesting is this question of how do you value decentralized networks versus centralized businesses in a sense. And you can look at this like 1-2 punch of, call it a, whatever the internet version of brick and mortar business is, and then its decentralized network equivalent. And there's such a wide gap in the valuation of the two, which creates this interesting sort of M&A dynamic. And so that's something I keep thinking about, which is as these worlds collide increasingly, will we see a narrowing of the gap and or, as basically traditional businesses embrace decentralized rails? Will that drive down the value of decentralized rails? Will it drive it up? How do you do a P&L on a network where so those are the questions that come to me when I look at this. I have no opinions beyond that, if I'm honest.
Yeah, well, of course, this does follow Circle launching their own sort of correspondent banking network type of play just last week, which could be fascinating to watch. Cuy, do you mind if I bring in the next story and we can talk more broadly, which is Korean banks are going to launch a joint stablecoin. So they've decided to create a joint venture to issue the Korean stablecoin. The large bank not named, the only large bank not named in reports is Hana Bank. South Korea does not currently have stablecoin regulation, although it is thought to be introducing some later this year. Some more regulatory clarity is coming. And an unnamed banking official apparently said to a local newspaper, if banks don't enter the market could be formed around them and different businesses. Jelena, your thoughts on this?
Yeah, I came back from Korea actually a couple of weeks ago. I make a point of going at least once a year, if not twice a year. The Korean market, like as a whole for crypto, is so fascinating. I don't know how much you guys are kind of familiar with like the dynamics, but from what I understand, a ton of global crypto trading volume is actually through Korean exchanges, somewhere between a third to a quarter at any given point. And it's a country of only 50 million people. And so you might be thinking, like, how is that possible? Like, why are so many people in Korea trading crypto? There's a few reasons. Like, one, they don't pay taxes on their crypto gains in Korea, so there's no capital gains on crypto in Korea, unlike stocks, property, etc. And then also gambling is illegal, like for Koreans, completely illegal. So if you go to a casino in Seoul, like you're a foreigner. And so the point being is there's so much crypto adoption in Korea, and a lot of that trading volume is kind of vis-a-vis stablecoins, right? As it is in like the rest of the world. And so they're, quickly realizing, well, let's make sure that the Korean won obviously isn't, kind of compromised in the process. And let's make sure that, with the introduction of kind of US dollar stable coins like USDT, for example, being listed last year on one of the major exchanges, that, Koreans can continue to trade kind of against the won, but in a stablecoin form. So, crypto is just huge in Korea, like absolutely massive and way bigger than I realized. 1 in 2 people trade crypto in Korea. So about 25 million people either trade or hold it. And it's like across the board, like all sorts of like ages, demographics. Actually, the average trader is about 45 plus. So skews much older, meaning they have more capital, meaning they're, investing quite a lot in this market, in this very speculative market. So the Korean won, I mean, yes, they want to make a stable coin because, if they don't control it, yeah, obviously that can create opportunities for fraud and kind of like high risk, stablecoin alternatives. Let's also not forget Terra was a Korean project that a lot of Koreans were kind of invested in, and the UST stablecoin. So it just makes a lot of sense that they want to do this. My question is, like, why now? Like, why not like 2 years ago or right after Terra collapsed? I think honestly, kind of going back to my previous point, it's reactionary against like the Trump kind of like Trump administration movements to create stablecoin like regulatory clarity, right? Like now that the US is like actually going to do it, like for real, and Trump actually put this in his executive order, right? That stablecoins, are a focus. Now you have like the Korean government being like, okay, well, we need to get like smart quickly and have a proper kind of framework. Otherwise, USD stablecoins will continue to kind of, gain a lot of share. And, we need people to have a local alternative that's like safe and like legitimate. So I have a lot of thoughts on Korea and stablecoin regulations, but that's kind of like the TLDR, I guess. Yeah.
Yeah. So it seems like there are like 2 trends here. One is just the continued growth in new non-USD, local currency stablecoins that are being created. And I think we tend to believe every major fiat currency is going to come on chain. The question is going to be, who's going to bring it on chain? And is it going to be an existing, crypto provider, an existing, stablecoin, issuer expanding to other markets, which, we're seeing a number of times, or is it going to be a bank? And then if it's going to be a bank, is it going to be one bank or is it going to be a consortium of banks? And I think that's going to be the really interesting question. And it's going to depend on the market. I think if you have a market that only has, a small, handful of banks, and I actually don't know the details of Korea around what the distribution is of the largest banks, a consortium could be a viable model if you have 4 or 5 banks getting together, creating a stablecoin of the local currency that's interoperable. I think markets where there are a lot more banks, I think it's a challenging coordination problem. I think in the U.S., like we've seen USDF, we've seen some other attempts, but to create a consortium of a few thousand banks together in a larger market, and be able to get them to agree on the rules and the economics and the go-to-market and distribution and the tech. And there are a bunch of questions that you have to ask when you launch a stablecoin. What chain is it going to be on? What are you going to do with the yield? What use cases are you going to support? Like there are those things that I think if you have to answer by committee, it can be very challenging to do. So I think we'll see a combination of both. I think we will see bank consortium issued stablecoins in some markets. We'll see single bank issued stablecoins in other markets, and we'll see existing stablecoin issuers that are non-banks or crypto companies continue to grow their business, and all of those products together will circulate and interact with each other over the next few years.
The Korean banks at least appear to have a stablecoin strategy, and it's very visible that they're doing it ahead of regulation. And concentrated banking markets are the norm, not the rarity. The likes of the US with thousands is actually a lot more surprising than Canada and Japan and the United Kingdom, and so many markets where actually maybe this is a model where the big banks figure out how to play in this new technology area in a way that kind of makes sense. The other dynamic that's a little bit different is outside the US, the private credit and the private markets aren't nearly as developed when it comes to lending or the deposit side and the money market fund side. So there's a real risk if you are a domestic bank that with the rise of dollarization from stablecoins, you see deposit flight out of your local currency into dollar stablecoins and away from banks entirely. So as banks, how do you counteract that? You have a local currency stablecoin or something along those lines. So I think it's a sensible defensive play that concentrated banking markets could do, but banks getting coordinated around things is hard. They have done it a lot in the past. I mean, there's this thing called Visa where, Bank America turned into this thing where a lot of banks got together and formed a company that went on to do quite well. There's Swift. There's countless other examples along those lines. So they can do it, and it can be very, very successful. Look, that sort of almost closes the time we had for today. I did want to give a shout out to MasterCard as well, who had their own news this week. They're able to power stablecoins from the wallet all the way through to merchant acceptance with what they're calling 360-degree enablement. This is a partnership they've got with both Nuvei and the crypto exchange OKX. And I think that is just another brick in the wall of end-to-end acceptance starting to become a reality, regardless of your card scheme, regardless of kind of where you are. I do want to thank everybody for watching, thank everybody for listening, and I want to thank especially Jelena so much for letting me butcher your name, but also letting us hear from you this week. If people want to hear more from you or more from what you do at Noble, where do they do that?
I'm terminally online, just like everyone else, I'm sure. So Twitter or X, Jelena_Noble. Check out our website, noble.xyz. Twitter's the best. So yeah, thank you, Simon. Thanks, guys, for having me.
Henry, how about you?
Yeah, we are at Privy_IO on Twitter, and I am Henri_Stern.
Fantastic. And Cuy?
On X at Cuy Sheffield and visa.com/crypto.
You'll find me at SY Taylor on Twitter, Simon Taylor on LinkedIn, or fintechbrainfood.com, and of course, sardine.ai if fraud, compliance, bots, deepfakes, or anything like that are a bit of an issue. So if you haven't already, go ahead and subscribe. If you're watching, hit those like buttons or reaction buttons or whatever it is that you see beneath you. It really, really does help us out. And, maybe this week, tell a friend about the show. Tell us where you like it as well. Thank you so much, and we'll catch you next time.